Bitcoin is ruling the crypto world, and it's becoming the go-to choice for traders. Bitcoin's value is rising daily, and it's currently the most valuable commodity, even more valuable than gold. Welcome to our channel, Financial Insights, the place where you are always a little bit smarter and wiser after seeing one of our valuable videos, so you can develop your financial knowledge. Today's video is all about Bitcoin and why I bought it. Don't forget to press the like button and subscribe to our channel so we can make even more financial content. Before we begin, let's understand what Bitcoin really is so that we're all on the same page. Bitcoin is a cryptocurrency invented by an unknown person or a group of people known by the name Satoshi Nakamoto. It was created in 2008 and its use began in the following year. Bitcoin is a decentralized digital currency. It doesn't have a central bank or a single administrator. Bitcoins can be sent from user to user on the peer-to-peer Bitcoin network without the need for intermediaries. Bitcoin transactions are verified by network nodes through cryptography and recorded in a public distributed ledger called a blockchain. Bitcoins are generated as a reward for a process known as mining. Bitcoin mining is a process in which individuals or a group of people called miners help to secure the network and verify transactions by solving complicated mathematical algorithms. And in return, they will be paid some Bitcoins as a reward for their work. What Bitcoin miners get when they mine successfully is called a block reward. A block reward is given to the miner for the completion of each puzzle. When Bitcoin was created, the value of a block reward was 50 Bitcoins. This block reward halves are discovering every 210,000 Bitcoins, which takes around 4 years to complete. Currently, a block reward is worth 6.25 Bitcoins, and block time, which is the time it takes to create the next block in a chain, is 10 minutes. Bitcoins can be exchanged for other conventional currencies like dollars. They can also be used directly to purchase products and services. Currently, there are over 18 million Bitcoins in circulation, and around 2 million Bitcoins are yet to be mined. Bitcoin mining is set to be completed by the year 2140. Why that long? It's because Bitcoin mining difficulty is always rising, and as I said before, the block reward halves every 210,000 Bitcoins. However, Bitcoin still isn't the perfect currency for trade. That's because Bitcoin has been used in illegal transactions due to its untraceable and decentralized nature. Then there's the energy problem, as Bitcoin requires a large amount of electricity. This can ultimately result in environmental damage as the manufacturing and operation of large, high-end computer hardware needed for Bitcoin mining can cause pollution. The raw materials required for manufacturing computer components are mined for real, and real mining is damaging to the environment. Also, the energy source of these computers is likely non-renewable. We may reach a point when Bitcoin mining is unprofitable and cannot be justified. Bitcoin has also been criticized for its price volatility and thefts from exchanges. Some economists, including several Nobel laureates, have identified Bitcoin as a speculative bubble at various times. Bitcoins have also been used as an investment, although several regulatory agencies have issued investor alerts about Bitcoin. Now, you must be asking yourself what cryptocurrency is. A cryptocurrency, or crypto for short, is a digital asset designed to work as a medium of exchange. The records of crypto ownership are stored in a ledger existing in the form of a computerized database. The database uses strong cryptography to secure transaction records, control the creation of additional coins, and verify the transfer of coin ownership. Typically, cryptos do not exist in physical form like paper money and are generally not issued by a central authority. Cryptocurrencies use decentralized control, unlike digital currency and central banking systems, which are centralized. Cryptos are generally considered centralized when they are minted or created. This is prior to its issuance, that is, before it gets issued by a single issuer. Each cryptocurrency works through distributed ledger technology when implemented with decentralized control. This is typically a blockchain, and it serves as a public financial transaction database. Bitcoin, first released as open source software in 2009, is the first decentralized cryptocurrency. Other cryptocurrencies have been created, such as Ethereum and Dogecoin, since the release of Bitcoin. The main focus of this video may be on Bitcoin, but it is actually more than just Bitcoin. The principles discussed in this video apply to all kinds of assets and not just Bitcoin. Suppose you're considering getting into the crypto world by investing in Bitcoin. In that case, you should bear in mind that Bitcoin price fluctuates wildly. Remember when I said that the price of Bitcoin increases daily? Well, that's not entirely true. In reality, Bitcoin prices are going up and down every minute. However, the net effect on price is that it's on a steady, if not rapid, climb. We all know that Bitcoin is highly rewarding. Its price has appreciated almost 4.7 million% in 10 years. So what's the catch? They say that with big risks come big rewards. But in this context, I want to reverse that quote by saying that with big rewards come big risks. Or in other words, investing in Bitcoin comes with its risks, and like most investments, you should be in it for the long term. So if you cannot handle the price fluctuations and the risk, you shouldn't be buying Bitcoin in the first place. Now let's talk about what happened and what made me buy Bitcoin. Well, it is common sense that diversifying your portfolio by investing in multiple asset classes will give you more security to your investment. I believe that a diversified portfolio is more likely to grow consistently and stably. So, I decided to diversify my investment portfolio by investing about 1 to 3% of it in Bitcoin, which isn't much. I advise you not to invest a big portion of your money into cryptocurrencies. That's because cryptocurrency prices are volatile and likely to crash, so you shouldn't take huge risks like investing your life savings into Bitcoin. That would be a colossal blunder. Now, let's talk about the value of Bitcoin and why Bitcoin or cryptocurrencies in general are increasing in value and popularity. Well, Bitcoin and other cryptocurrencies offer convenience and anonymity to the user. Only their cryptocurrency wallet IDs are shared. So does that mean Bitcoin transactions are untraceable? Pretty much, yes. While many people like the anonymity and lack of regulation Bitcoin offer, some believe that regulation could get Bitcoin one step closer to legitimation. Another reason why Bitcoin has a high value is that Bitcoin has a supply limit of 21 million, meaning that once 21 million Bitcoins have been mined, its supply will be exhausted. So there will never be more than 21 million Bitcoins in circulation. Hold on a sec. If Bitcoin has a limited supply, what will the miners do after mining the 21 million Bitcoins? That's not a problem. Miners can help in verifying Bitcoin transactions and get paid for that. What makes Bitcoin valuation different is that unlike traditional investments, backed by income-producing companies that provide a tangible product or service and post its revenue and profits each year, Bitcoin has no such thing. It's pretty much trading at its price simply because it's trading at its price. There is no specific reason why it's trading at $20,000 or $40,000 or even $50,000. Bitcoin's limited supply and high demand give it a high price, but there's no reason why Bitcoin is set at a certain price. Bitcoin's current supply is growing at a rate of less than 2%, but the demand for it is growing much faster than that. Bitcoin's supply limit, combined with the rising global demand for Bitcoin, means that its price is set to climb. But that doesn't make Bitcoin a safe bet. Bitcoin is actually at the very high risk end of the investment spectrum. As I said before, the price of Bitcoin and every other cryptocurrency is highly volatile and it has a chance of crashing. So I would not advocate anyone to invest an amount of money in Bitcoin that they cannot afford to lose. Still, more and more people are betting on Bitcoin, including the rich and popular ones. Research produced by the University of Cambridge in 2017 concluded that the number of crypto users ranges from 2.9 to 5.8 million. That is the number of unique users using a cryptocurrency wallet. They also found that most of them are using Bitcoin. Companies are also investing in Bitcoin. MicroStrategy has bought $1 billion worth of Bitcoin. Grayscale has over $3 billion worth of Bitcoin. Just recently, Elon Musk's Tesla Inc. has purchased $1.5 billion worth of Bitcoin. They have started to accept Bitcoin as payment. This has led to a rise in Bitcoin prices. Data suggests that more and more institutional investments drive the price up and calm the volatility of Bitcoin prices. All being said, the true value of Bitcoin will always be subjective. It depends on what metrics you want to use. So, is Bitcoin really worth it? Is it overvalued? Do you think crypto is the future? Much the same as conventional currencies, Bitcoin has steam. No doubt that its market is exceptionally unpredictable and its worth continues fluctuating a great deal. Welcome to our channel, Financial Insights, the place where you are always a little bit smarter and wiser after seeing one of our valuable videos so you can develop your financial knowledge. Don't forget to press the like button and subscribe to our channel so we can make even more financial content. The fundamental reason for the high value of Bitcoin is its unavoidable utilization across the world. Numerous organizations and people are utilizing Bitcoin as an installment strategy rather than conventional monetary forms. Most shoppers are using Bitcoin given the high comfort and simplicity of Bitcoin and the extreme security that blockchain innovation offers. Would you like to invest in Bitcoin as well? This video will take a look at the step-by-step guide on how to buy Bitcoin safely. Cryptographic forms of money like Bitcoin are acquiring immense prominence. It has plenty of clients who are accepting Bitcoins in their organizations. Through this, exchanging has become much simpler and more conceivable. Individuals are picking real estate organizations and even cafes that acknowledge Bitcoin payments. By taking a glance at the development rate and Bitcoin estimation, its worth may ascend with more retailers and organizations accepting it as a payment strategy. Before we jump into the step-by-step guide regarding how to buy Bitcoin, you must know why to trust this cryptocurrency. Precisely, the popularity of Bitcoin is due to the three following reasons. Cryptocurrency allows for quick, easy, and cheap transactions. Bitcoin isn't reliant on central power and banks, and this implies there are no intermediaries. Without any middle people being involved, no exchange expense is charged when compared with conventional monetary forms. While moving assets through banks internationally, they typically charge colossal costs and exchange charges from both the sender and recipient and require a few days to finish the exchange. Moving assets through Bitcoin is a lot simpler cycle as it requires just a few minutes to complete the deal, and an insignificant exchange expense is included. This has made Bitcoin more accessible worldwide, and there are not many limitations or laws while finishing exchanges. Secondly, using Bitcoin transactions is highly volatile. The public authority and its community don't control the Bitcoin market. Its clients control it. The Bitcoin market is highly volatile along these lines, and it acts as a per demand and supply. Lastly, the Bitcoin market has less risk of fraud. Most investors are pulled into Bitcoin because it is totally computerized, and this factor is fascinating to merchants and financial backers. Also, there are no misrepresentation issues since it has no actual physical appearance and isn't constrained by a central authority or monetary organizations. We have understood the advantages of using and investing in Bitcoin. Let us now take a look at the step-by-step instructions on how to buy one. For easier understanding, let us consider this part in three broad phrases: best brokerage to use, how to start an account, and how to make your transactions. Let us take a look at it one by one. Step 1. Best brokerage to use. First of all, why do you need brokerage to buy Bitcoin? Bitcoin brokers empower you to purchase or sell digital money. Without a specialist, you can't securely exchange cryptographic forms of money like Bitcoin. To evade scams, utilizing a trusted specialist is pivotal when you are trading Bitcoin. To avoid falling into traps, always avoid buying Bitcoin directly from third-party markets or websites. There are several trusted sources with a lot of user base. You could use eToro, Gemini, VeChain, IG, or HYCM. eToro is a user-friendly brokerage that is great for investors who are beginners, and a mobile app is available for easy access. It is regarded as one of the best for cryptocurrency trading. Gemini has a lot of trusted backups and a wide range of users. However, it is better for people with some bit of experience in Bitcoin trading and people looking for a more advanced platform. VeChain, IG, and HYCM are all giving excellent services, great overall offering, multiple trading platform options, and fantastic customer service. Bitcoin brokers empower you to purchase or sell digital money. Without a specialist, you can't securely exchange cryptographic forms of money like Bitcoin. To avoid scams, utilizing a trusted specialist is pivotal when you are trading Bitcoin. Make your choice wisely. Having a brokerage that you trust is very important for trading Bitcoin, mainly because of its volatility. Step number 2. Starting an account for transactions. No matter which brokerage you choose, everybody requires 2 crucial things: anti-money laundering and know your customer. This means that all of them need you to provide your name, ID, phone number, address, social security number, passport details, and among other things. One important thing to note is that the less information you provide to them, the less your limits to buy and sell Bitcoin. Information here means the various details about yourself, such as your social security number and passport details, among various other things. To start an account in any of the said sites, visit the official webpage to create an account. The first things you need to provide are your first name, last name, email address, and password. Following this, you need to provide your phone number for verification. After this comes uploading information such as a passport number. Once you complete this, you also need to provide a physical mailing address. Voila! You now have an account in the selected brokerage. Everyone values the safety and security of your bank details, even more so if you are dealing with huge transactions such as trading Bitcoin. You can install an app called Authy to protect the details on your phone. Nobody can access anything until and unless they have physical possession of your phone. Pretty cool, huh? Step 3. Making transactions. Once you have an account in any of the brokerages, you need to fund it. You have various options to fund the account, such as credit cards, debit cards, or direct bank transfers. We recommend that you not use credit or debit cards for such transactions because of their insanely high interest rates. In your account settings option on the brokerage site, you can find an alternative to fund it using bank transfer or debit credit card options. You can connect as many bank accounts as you want, and once you do that, you can select your currency and the amount to fund the account. Once you have done that, you can surf the website to choose which cryptocurrency you want to buy, be it Bitcoin or on Ethereum. You can customize how many times you want to buy or sell, once, daily, weekly, monthly, etc. There are limitations for your transactions depending on the sites you use. Bitcoins are not, in fact, coins in the conventional sense, so it just appears to be correct that a Bitcoin wallet would not be a wallet. Your Bitcoin wallet that your picked brokerage will allocate you is an alphanumeric line of irregular letters and numbers, yet you can think about this Bitcoin address as your bank account number. Bitcoin balances are maintained using public and private keys. Keys are just names for these public and private strings of numbers and letters. It is connected through the numerical encryption algorithm used to make them. The public key addresses are your bank account number, and it is where transactions are deposited or withdrawn. This is the key that shows up on the blockchain record as a client's digital signature. The private key is the secret phrase required to purchase, sell, and exchange the Bitcoin in a wallet. A private key ought to be guarded, secret, and used to approve Bitcoin transmissions. Be that as it may, with such a wallet, you don't control your private keys and may not have the option to get to them at times. If you download an independent wallet on your PC or cell phone, you will ultimately control your private keys. However, if you fail to remember your secret word or lose your private keys, your Bitcoins are lost forever. This is the reason why you need to guard your private key very safely. Instead of controlling it online, you can write this key down on a sheet of paper, keep it in a safe place, and ensure that it is accessible only by you. While a trade like Gemini stays quite possibly the most mainstream Bitcoin trading method, it isn't the only technique. The following are some different processes Bitcoin proprietors use. You can use a facility called the Bitcoin ATM. Bitcoin ATMs act like face-to-face Bitcoin trades. People can insert money into the machine and buy Bitcoin that is then moved to a protected digital wallet. Bitcoin ATMs have gotten progressively famous as of late. Apart from this, you can even go for peer-to-peer exchanges to provide a more direct connection between the users. However, this is not very secure because your anonymity and other details are at stake. Content. There are crazy theoretical predictions that make Bitcoin what it is, but just hold it. And what if it's going to be $5,000 again? We've seen from time to time what comes around goes around. In several cases, the pandemic demonstrated the need for market-resisting investment opportunities in 2021. What started out as demand for inflation-beating interest rates has now become a deeper need for growth and stability. If you think you missed the boat, you haven't. The uptrend is still on. And last but not least, we want to show you something absolutely mind-blowing, which also tells you exactly why you need to buy Bitcoin. Bitcoin is in reach of its all-time high of just under $20,000, reached in December 2017. It debuted at nil in 2011 and last traded at $18,415. Estes estimates that Bitcoin could reach between $100,000 and $288,000 by the end of 2021. Based on a formula that uses the stock-to-flow ratio to calculate the scarcity of commodities like gold. The model, he said, has a 94% correlation with the price of Bitcoin. Citi technical analyst Tom Fitzpatrick said in a note last week that Bitcoin could raise as high as $318,000 by the end of next year, citing its limited supply, ease of cross-border travel, and opaque ownership. Today, we're going to get started on a 4-hour Bitcoin chart to analyze the current situation. We've seen a Bitcoin bounce. What we're talking about so far, or what we've seen so far, has been the biggest reversal in this parabolic uptrend to about 28.4%. So that's all perfectly within the range as we've expected corrections up to $100,000 in the range of 20 to 30%. So we're not really shocked that this could even be lower, but thankfully, it was exactly in the range of the anticipated pullbacks. One should never have a nil Bitcoin balance in their life, and that should be your mind as well. You never want to be a zero Bitcoin balance in your life. It doesn't matter if you've only got a few Satoshis. Bitcoin is divisible in 100 million Satoshis, so if you can't get your hands on one complete Bitcoin, make sure you stack some Satoshis at least. And we're pretty sure you can afford it. But not getting a Bitcoin right now is certainly reckless, and we're going to clarify why. Let's just rewind to some date and the gains that you could have gained if you had invested in Bitcoin back then. Remember, this is just for the sake of understanding how much we could have made. The game is still on, and you can still invest in Bitcoin and make as much as this. Your gains would be approximately 85% if you would have bought Bitcoin on the 7th of December. That is already quite nice if you think about it for that short time span then. And if you had bought on the 20th of October, shortly before we saw a pump, that would already be an almost 200% gain. Think about that those gains are actually quite significant, but even better, if you had bought Bitcoin back over here on the 29th of July 2020, you would be right now up approximately 225 by just watching YouTube videos. Insane, right? You're not going to do what a YouTube tells you to do, alright? You should take all the opinions from books, maybe from other YouTube videos, maybe from friends and family, but all those opinions, all those tips in one basket, and out of that basket, you're creating your own plan, a strategy which works for you. You're in control of your assets, so pick the right thing to do out of all that you've got. As far as information is concerned, this is really important. Don't just do what the YouTuber tells you to do. Take advice, think about it, and then respond accordingly. Now it's getting interesting because we're talking about how you can really multiply your Bitcoin. Right now, looking at the monthly Bitcoin chart, it really looks as if we're looking at the RSI that this bull market isn't over yet. We're certainly a long way from the top gain. Our conservative bullish prediction is that by the end of this year, we're going to top around 100 to 200,000 US dollars. But if we're looking at Bitcoin price right now, it could be way too conservative anyway, and we've got to stand up with that prediction for now. So now we've got 3 ways to get your hands on more Satoshis. The first one is very easy. Make more money to buy more. So maybe you want an extra job, or perhaps you need an extra job to buy an extra Bitcoin. Well, if you don't want to do that, there's no problem. We've got 2 more choices. So the first one is pretty easy, nothing special, just buy more Bitcoin. The second one is to flip altcoins. A lot of people out there, particularly people who know the market very well, are growing their number of Satoshis Bitcoin by flipping altcoins. It's really risky, particularly for new people out there. It's really hard to find out when you're going to join a project and when you're really supposed to sell the project again. It's really risky too because people seem to fall in love with their investment. You may not believe that right now, but just take a look at some of the altcoins armies out there. They really get in love with their investment, and while everything looks super bad, they stay with their investment and they want to keep it down to zero. We wouldn't have recommended it at all. Okay, so the second option is really risky, but it's certainly possible to flip altcoins. Now, the third option is still risky, from our point of view, a little less dangerous than tossing altcoins, but it's still risky, particularly for new people out there, and that's leverage trading. Trading Bitcoins, but with leverage. You can do it on platforms like Bybit and on leverage trading guys. Well, at some point, you've got to get started if you want to get into it alright, and this is risky. Yeah, we wouldn't suggest leverages above 10, but it's certainly an option to raise your Bitcoin returns on the bull market because once again, and we think we all agree, this bull market isn't over yet. And dips, dumps, corrections, whatever you want to call it, as we saw yesterday, are completely ideal opportunities to get in long positions upside down. But please don't get too greedy. Greed is something that can certainly hinder you from gains. But don't be too selfish. Often you just need to be happy with 100 or 200 and not 1000 or 10,000% are well conscious of that. This is so interesting. Major organizations don't want to see you buy cheap Bitcoin because they want to buy cheap Bitcoin. Guggenheim, who had already invested in Bitcoin, was coming out with this right now. They were suggesting that Bitcoin's parabolic growth is unsustainable in the near term, prone to a setback. Right now, we've seen it. The technical goal of more than $35,000 has been surpassed in order to make some money off the table. So essentially, they're saying right now that the economy is unsustainable and that you should get out of it right now. Take some money off the table, but at the same time, what they're doing is get this right now. Guggenheim and SEC filing to invest in Bitcoin via BTC proposed filing will become effective January 31st. Seems my nerd wants to buy us $500 million in Bitcoin, and as the price goes up, he's now asking people to make money. It's a gamble that has drawn eye rolls from skeptics who believe that volatile cryptocurrency is a financial commodity rather than a store of value like gold. Since January, Bitcoin has risen 160%, reinforced by strong institutional demand as well as scarcity as payment companies such as Square and PayPal buy it on behalf of customers. The 60-40 rule is a showstopper today. It is the strategy that involves constructing portfolios which are all allocated 60% to equities and 40% to bonds. The simplest implementation of the strategy would involve buying the S&P 500 and US Treasuries. If you were to go that route, your portfolio would primarily contain US investments. You could also build a globally diversified 60-40 portfolio by including international stocks and bonds as well. In theory, a 60-40 mix allows you to maintain balance in your portfolio when the market is high and when it is low. It's designed to minimize risk while generating a consistent rate of return over time, even during periods of volatility. In its simplest form, the 60-40 rule means having 60% of your portfolio invested in potentially higher risk, historically higher return assets such as stocks and the other 40% invested in lower risk, but also traditionally lower return assets such as government bonds. The theory is that a 60-40 portfolio should provide equity-like returns while smoothing out the extreme highs and lows that come with an equity-only portfolio. The secret to making the 60-40 rule work. To make the strategy work, investors need to tweak their portfolio at least once a year to ensure it retains its roughly 60-40 split. This action is known in investment circles as rebalancing. In practical terms, it involves selling some outperforming assets and reinvesting the proceeds in their underperforming ones so that the mix of stocks and bonds remains 60-40. You need to do this because, for instance, if stocks have a good year and bonds have a bad one, equities could end up representing a far bigger percentage of your portfolio than 60%. Left alone, you could unwittingly end up with a portfolio heavily weighted towards one asset, and that leaves you exposed to greater risk. In this example, by selling outperforming stocks and buying underperforming bonds, the portfolio would again be balanced. In an ideal world, the underperforming assets would then begin to perform better, enhancing the total portfolio return, while also smoothing out volatility, that is, extreme highs and low price moves. All stock portfolios tend to have higher volatility than stocks and bonds together. Traditionally, investing in fixed income assets like US Treasuries offered the dual benefit of yield enhancement as well as diversification for those investing in multiple assets. The fixed, reliable yield of U.S. Treasuries has averaged 4% over the past 3 decades, which has complemented the total return of multi-asset portfolios. In fact, 2.3% of the return from the above 60/40 multi-asset portfolio over the past 30 years has come from fixed income. This return carried little risk of capital loss, providing investors with exposure to some stability during periods of volatility in riskier portions of the portfolio. The historic hedging property of fixed income has helped make the 60/40 portfolio popular. While equities over the past 3 decades have returned 8.8% per year, volatility of the asset class has been high, 15%, with 3 periods of drawdowns where the market, as measured by the MSCI ACWI index, fell in excess of 30%. While a high-returning asset class, equities can also inject substantial risk into portfolios, and diversification across the asset class often fails when it is needed most. Bonds, however, have provided a ballast. Over the past 2 decades, the correlation between stocks and bonds largely has been negative, meaning when stocks have fallen, bonds have typically risen. This negative correlation, or dampening effect of bonds, has delivered volatility to the above multi-asset portfolio of 9.1% over the past 30 years, which is 5.9 percentage points lower than the all-stock portfolio. Does the 60/40 strategy still work? Over the last decade, a 60/40 portfolio could have returned 7.5% annually. However, record low interest rates and other policy initiatives employed by central banks to aid economic recovery after the financial crisis have distorted returns. The overall effect was a reduction in the return on government bonds. For instance, a bonds-only investment since 2008 would have just returned just 2.5%. This compares with the stocks-only portfolio that would have returned 10.3%. The low interest rate environment, combined with central bank monetary policy, has kept bond yields artificially low and pushed investors into riskier assets, such as stocks, in a search for higher returns. Traditional 60/40 portfolio with Bitcoin allocation. Bitcoin has an excellent price performance combined with high volatility. Rationally, these features would render it a perfect asset for diversification with more traditional investments. Let's explore how Bitcoin performs when included in a traditional 60/40 portfolio. 60% stocks, 40% bonds. When looking at 20-year annualized returns by asset class, 60/40 strategy has been a relatively stable option, offering 5.2% return annually. S&P 500 fared slightly better, offering 5.6%. While these returns well outpace the traditional investor, the real inflation-adjusted return for 60/40 is closer to 3.5% annum. We're also witnessing the longest bull market in history for stocks, so the long-term perspective might be biased. What would be the optimal allocation for Bitcoin in a traditional portfolio? By the estimation, the optimal portfolio would call for an allocation of 14-21% Bitcoin, 85-79%, 60/40. These weights would indicate an annual expected return of 13 to 23%, a standard deviation of 6 and 16%, and a Sharpe ratio of 166. This portfolio would obviously outperform the average annual returns of the 60/40 portfolio. The expected return of the model portfolio would also outperform the average annual returns of the S&P. Bitcoin hits fresh all-time high as big institutions look to join crypto party. Bitcoin, the biggest cryptocurrency, hit a fresh record high of $48,687.34 as some of the world's largest companies such as Twitter, BNY Mellon, and MasterCard have said they were looking to embrace cryptocurrencies. Twitter said it was considering paying its employees in Bitcoin, while major financial institutions, BNY Mellon and MasterCard, said they will enter the cryptocurrency business. The mayor of Miami, US, Francis Suarez, said he was mulling paying municipal workers and collecting taxes in Bitcoin. All developments come close on the heels of Tesla disclosing that it has invested $1.5 billion in Bitcoin. Moreover, BlackRock Inc., the world's biggest asset manager, said last month it will invest in the cryptocurrency. Bitcoin as an inflation hedge. Bitcoin is seen as an inflation hedge mainly because of its limited supply, which is not influenced by its price, and because of its relative attractiveness when real yields head to zero or lower. Yet, when you buy Bitcoin, you're not just doing so to hedge inflation, you're buying Bitcoin to hedge all the other negative consequences that usually accompany it. True, inflation is not always bad. Good inflation, a result of economic growth and low unemployment that helps to close the gap between supply and demand, encourages investment and even more economic growth. Bitcoin is also a hedge for unstable governments that close bank accounts, police states that want to seize private wealth, broken payments rails due to corrupted systems or outside cyber attack threats, paranoid leaders that want to disenfranchise opponents, export protecting devaluations that trigger more inflation. These are less likely in developed economies, but let's not forget that tipping points lurk around unexpected corners and that Venezuela was once one of the wealthiest countries in the world and one of the more stable democracies in Latin America. Bitcoin is a hedge against inflation, but also against political instability and social disruption, which, if inflation comes roaring back, it is not a ridiculous thing to prepare for. A dollar debasement hedge. Bitcoin is also a hedge against the more gentle but just as pernicious debasement of currency through a loss of trust. Traditionally, inflation moves in tandem with the strength of the local economy, but it can be triggered by currency weaknesses, which raises the prices of imported goods. This is usually corrected when the central bank raises interest rates to combat rising inflation, which increases the attractiveness of the currency compared to others. Bitcoin is a hedge for not just the macroeconomic ills that we have been trained to watch out for. It can also provide ballast against the unforeseen problems waiting to be triggered. The Crazy Thesis. This highlights another hidden strength of Bitcoin as an investment asset. In a world where you've gone from orthodox monetary policy to Keynesian economics to MMT in a few months, there is no longer any trust in the traditional recipes. To paraphrase G.K. Chesterton, when you stop believing in traditional recipes, your mind is more open to new ones. Bitcoin in portfolios represents more than a new recipe. It represents the need for a new recipe. It represents a hedge against crazy, which is hopefully not what awaits us. But the risk of not preparing for that possibility is verging on irresponsible, and not even thinking about it, it is likely to end up being prohibitively expensive. Given the above, the Bitcoin project looks like one whose prospects could seem inexhaustible, despite the impressive growth over the past 10 years. But make sure y'all go invest before it's too late. Without further ado, let's dive in. The ledger Nano X is one of the safest places to hold and store your cryptocurrencies. This is legitimately one of the favorite products in the entire crypto space, and it doesn't actually contain any cryptos inside of it. Instead, it creates a very easy-to-use interface that interacts with the blockchains of all these different coins. Otherwise, we'd have to be a software engineer to be able to do that, so this just makes it easy. Let us explain how to set up this device. Regardless of which hardware wallet you use, there is one thing that you must understand about all of these cryptos. It doesn't matter if you're using a Ledger Nano-like or your phone. That is, there is only one set of keys, which includes both a public and a private key. The public key now consists of a series of letters and numbers. They tend to be totally random, and they give your wallet a personality. You display this to people if you want to obtain money, so it's referred to as the public key. Then there's the private key, which is a different key. You should never, ever reveal your private key to someone under any circumstances. The private key on the Ledger Nano is a compilation of a dozen hidden key phrases, and you can bet that if you ever reveal those phrases to someone, your wallet will be toast. And those main phrases can be used by anyone from anywhere in the world, regardless of whether or not they have physical access to your wallet. The first step is to download the Ledger Live app from the App Store. This is the same if you're using an iPhone or an Android device. Now that you've done that, Open it up and click on Let's Get Started. So you can only scroll through and approve their terms of service at this stage. It's fairly standard stuff, and then you can go to a new device. After that, pick which device you're using. Then, we use it for the first time, so let's press Setup a new Nano. So, now that you've installed the Ledger Live app on your phone, it's time to get started with the setup. The device's work is extremely easy. As a result, it has two circles on each side. You'll navigate to the right if you press the right one, and the left one will take you to the left if you click on the left one. You'll check the action by pressing both buttons. So, after you've done that, it'll ask you to set it up as a new computer, and you'll need to press each of those circles and choose a PIN code. Then, and this is the most important aspect, re-enter it and confirm the same thing. When you reach the section after the PIN, the most important part, where your private key is shown, you must write down these hidden key phrases in the exact order that they appear. Keep it hidden, keep it safe. Whatever you do when you stop, for the love of the holy algorithm, don't take a screenshot of it on your phone thinking you'll be able to return to it later if you lose the piece of paper. Don't upload it to the cloud. Don't upload it to Dropbox. We can't emphasize enough how important it is that it remains offline and in a secure place. So, inside the packet, you'll find directions, a charging cable, and some blank pieces of paper on which you'll write down your secret key phrases. It makes no difference which one you want, and you'll need a pen for this. Simply click on the right circle to loop through the next word, and then repeat the process 24 times. When you're done, it'll ask you to confirm your recovery phrases, which means you'll have to go through each one again. It will take a few moments to process, and when it's done, it will say that your device is now ready. After you've completed all of this, it'll ask you to take a short quiz on your phone. So the next step is to connect the device, which is as simple as turning on your Bluetooth, making sure it's activated, and it'll show you this device, the Nano X. Once you click on that, it's just going to show you a number on your phone and simultaneously on the device itself, and you want to make sure that those two numbers are the same ones. So once you confirm that's the case, you want to click on a pair, and now it's going to take a little bit just to pair the two devices together. And now it's going to ask you to allow the Ledger Manager to pair, so click both the circles and you should be good to go. Hit continue and you're done. Your device is now ready to finally install the apps. Okay, so now that we've finished the pairing process between the Ledger and our phones, the two can now speak to each other. Let us share with you the best and simplest analogy of how this all comes together and how it actually works, because the Ledger is sort of like a Swiss bank vault in that it houses different currencies. But we have to first create the bank accounts within the vault, which is why we have to download all these separate apps from the Ledger Live app. Because if you think about it, you can't just have one wallet that houses both Bitcoin and Ethereum and Dogecoin. You have to compartmentalize each one separately. So that's why we have to download the separate apps. But don't worry about the apps themselves, they're already there. There's a zero learning curve, and we'll explain exactly how to do that by creating a Bitcoin wallet first. The process is exactly the same no matter which coin you want to use, whether it's Dogecoin or Ethereum or Bitcoin. Go ahead and open the Ledger Live app and click on Install Apps. It's going to show you this giant list of all the cryptocurrencies, and it's going to be very tempting for you to start pursuing these, and it's going to feel like penny stocks. It's going to start installing the app now. Once it's installed, you'll see it both on the Ledger and, of course, your phone, and then it's going to ask you to create an account. So what you're going to do is you're going to create a Bitcoin account. So once you click on that, it's going to ask you to confirm on your Ledger device. So you're going to go to the Bitcoin app on your device itself. You're going to press the two circles, and it's going to say the application is ready. So at this point, it's just going to take maybe a minute to start synchronizing all of your accounts, at which point you'll see something like Bitcoin native SegWit. Sometimes you'll see another account called just SegWit. Native SegWit is the cheaper of the two networks, but once you're happy and you've added all of your accounts, go ahead, click continue, and now you're done. Okay, so we've set up the app, we've created the account. Go to the Ledger Live app in the bottom left-hand corner. The Portfolio tab will show you all of your transactions across all of your accounts and all of your wallets. It'll show you exactly how much money you have invested across everything denominated in probable dollars. The next tab is Accounts, where it's going to show you each account for each crypto that you have, and you can create multiple ones for Bitcoin. The next tab is Transferred. The next tab is Manager, where you can create these different bank accounts or download all of these different apps for all of the different cryptos. And the last tab is Settings, where you can change all of the different settings and the different denominations. But that's the tab you'll probably use the least now. Test sending some Bitcoin from an online wallet to the device itself. BlockFi is one of the favorite places to keep crypto online because they pay up to 8.6% annual interest compounded monthly, which is crazy, after you take out Bitcoin from here and put it into the ledger. Pro tips. Number 1, people like to send small amounts first just to test that it arrives at their destination, and then once it does, then they send the rest of the money over. It's a really good habit to get into. The second pro tip is that if you're waiting for the transaction to confirm and you're like, I just want to know the status of what's going on, you can actually paste the hashtag address into blockchain.com/explorer, and it'll show you if your transaction has been confirmed or not. If it has, then you know you've probably received the money. But if it has and you don't see the money, then it means you probably sent it to the wrong address. A third pro tip is that your public address remembers that public key that will change from time to time. So don't worry and don't freak out if you see it change. That's just the natural way of the public key. The private key, on the other hand, always stays the same once you've written it down. It's never going to change. Today, we will be talking about 5 cheap altcoins that can make you insanely rich in 2021. Altcoins are basically all other cryptocurrencies that were launched after the success of Bitcoin. They generally sell themselves as better alternatives to Bitcoin. There are more than 5,000 cryptocurrencies in existence, and the number is expanding as well. Without further delay, let's get right into the video. Starting off with the list, at number 5, we have Pundi X. Pundi X is a blockchain company that is trying to create a new era of a decentralized world to improve the everyday life of common people. It is a project that wants to make spending cryptos as easy as a credit card transaction. The creators of the MPXS token believe that one day it will be used on their Ethereum-based point-of-sale devices. One of the main problems with crypto is that it can't be used to make payments. The company plans to change this by distributing hundreds to thousands of smart point-of-sale devices to retailers so they can accept payment in the form of MPXS, the network's proprietary crypto token. Pundi X raised $35 million during its ICO from September 2017 through January 21, 2018. 35 billion MPXS were sold during the ICO pre-sale and crowd sale. The team retained 15,750,000 and another 1,750,000,000 was distributed to early investors, and the rest was held by Pundi X for further development and marketing. It also set aside 2% of sold tokens to fund bounty programs across social media and online platforms. They have created 2 of the world's first blockchain-based devices. The first one is XPOS, which is a leading blockchain-based point-of-sale solution that will enable customers and merchants to easily sell, buy, and transact in digital currency. The next one is the groundbreaking block-on-block phone, which is powered by Function X, which allows users to use blockchain to call, text, or browse on the phone without having to go through a centralized service provider. They are working on developing the Function X ecosystem, which is designed to be secure, scalable, open source, and fully decentralized for developers and companies to build on, which will create a future where users can truly own and control their own data. Pundi X is also working on developing a card, which is named XPass Card. This will work together with the wallet and mobile app, enabling deposits and payments by a card that is pulled from the mobile wallet. Pundi X price today is $0.007870 with a 24-hour trading volume of $533,979,412. It has a circulating supply of 240 billion NPXS coins and a max supply of 258 billion. The company has taken on an ambitious and impressive task in tackling what could amount to everyday adoption of cryptocurrencies by the masses if their vision turns into reality. Number 4 is Holochain. Holochain is a validating distributed hash table where every node enforces validation rules on data against assigned chains where the data originated. It functions much like a blockchain without bottlenecks when it comes to enforcing validation rules. It is designed to be fully distributed through sharding, so each node only needs to hold a portion of the data instead of full copy of a global ledger. It enables distributed web with user autonomy built directly into its protocols and architecture. With digital integration under user control, it liberates our online lives from corporate control over our choices and information. It allows any device to have its own chain-based ledger system. With the use of a holographic model for transfer and data storage, developers can now create decentralized applications which can scale in multiple dimensions across a network, ensuring that they are truly distributed. This allows every device on a network to function on its own and only requires data synchronization when necessary or agreed upon by the users. This means that every user is in control over their own data and will never have to risk their data being exposed or sold to third parties like what happened recently with Facebook. Its price today is $0.00991 with a 4-hour trading volume of $883,262,213. It has a circulating supply of 180 billion HOT coins and a max supply of 178 billion. At number 3, we have BitTorrent. BitTorrent was inaugurated in the year 2019. It was initially formed by Bram Cohen, a peer-to-peer protocol for users to transfer files around the world. Its native token, BTT, comes in the form of a TRC10 utility token that is only compatible with the Tron blockchain. Platform content creators can engage with their audience in this design. They are also able to earn as they speed the cryptocurrency without any intermediary. Right now, BitTorrent provides a platform for the largest file sharing protocol with more than 100 million users. The platform was acquired by the Tron Foundation in 2018. BTT can be used by the users on the Tron blockchain to play along with the files that content creators share on the network. It is now considered one of the largest peer-to-peer software that exists on the blockchain. The BTT token is added to introduce some economic features on the BitTorrent for bandwidth, networking, and storage resources to be traded and shared. It also offers other features like BitTorrent speed, where the BTT tokens can be big in exchange for faster download speeds. Its price today is $0.003703 with a 24-hour trading volume of $2,650,242,940. It has a circulating supply of 660 billion BTT coins and a max supply of 990 billion. Number 2 is Chainlink. Chainlink is a decentralized Oracle network that brings off-chain data into an on-chain format, bridging the gap between the isolated blockchain and real-world data. Chainlink oracles can be used by smart contracts with different purposes. Their primary use is to supply reliable data from off-chain and on-chain sources to growing dApps market. Such data can include financial data, market price feeds, data from the IoT devices, etc. It also hopes to facilitate the connection between blockchains and payment systems, such as PayPal or Swift. Right now, the most developed Chainlink functionality includes aggregate price feeds for fiat and cryptocurrencies. To establish price feeds, Chainlink is attracting external data providers, such as decentralized and centralized exchanges. Then, Chainlink nodes aggregate the data from external providers to create a price update resistant to manipulations. In the end, any smart contract with established access can use this price data. So, Chainlink is able to offer services to both data providers and data consumers such as DeFi companies. For example, Chainlink is used by Synthetics to establish prices on their derivatives platform, and AAVE uses it to ensure the total value of the collateral. It is also cooperating with some big tech and financial players who are looking to expand its services into crypto markets. They are working with Swift on a large project to establish infrastructure for connecting existing banking systems and smart contracts. Its price today is $27.38 with a 24-hour trading volume of $817,460,550. It has a circulating supply of 420 million linked coins and a max supply of 1 billion. Finally, at number 1, we have VeChain. VeChain is a blockchain platform that is designed to enhance supply chain management and business processes. Its goal is to streamline these processes and information flow for complex supply chains through the use of distributed ledger technology. It was introduced in 2015 as part of Shanghai-based blockchain as a service company, BitC. VeChain is a distributed business ecosystem leveraging blockchain technology. It's specifically designed to be used by both small and big businesses. VeChain was started as a subsidiary of BitC, which is one of China's largest blockchain companies. It is one of the few blockchains that already have a substantial customer base among many established companies. At first, the VEN token functioned on the Ethereum blockchain. VeChain transitioned onto its own blockchain and rebranded itself in 2018. The VeChain White Paper 2.0 states that these solutions are not just theoretical, they are solutions tested and discussed with over 700 enterprises and implemented for over 100 plus Fortune-level enterprises. Their initial target is to disrupt the supply chain industry by making data actionable and transparent. VeChain has also inked strategic partnerships over time with many companies in order to help achieve this goal. The VeChain platform contains two distinct tokens that are VeChain Token and VeChain Thor Energy. VeChain Token is used to transfer value across VeChain's network, and VeChain Thor is used as energy or gas to power smart contract transactions. VeChain Thor is the public blockchain of VeChain. VET or VeChain tokens are used for financial transactions on the VeChain Thor blockchain and market speculation. VTHO or VThor token is used to conduct transactions on VeChain Thor. VET owners can generate VTHO for use on the VeChain Thor blockchain. Its price today is $0.09246 with a 24-hour trading volume of $981,249,901. It has a circulating supply of 65 billion VET coins and a max supply of 86.7 billion. Type altcoins in the comments below after seeing this video. Thank you for watching the video, follow us on Instagram, and make sure to subscribe and check out our other valuable videos. See you soon at Financial Insights.